Today, we are going to talk about credit reports and why you should constantly monitor your credit report before and during the loan process, and even after. Hello, this is David Xie with the Xie Mortgage team. Credit reports are just like humans. They're going to make mistakes. There are going to be errors, and here are some of the most common errors to look out for so that you have success when you're looking for financing. So the Consumer Finance Protection Bureau basically has come out and they're like, hey, we want to protect our consumers, and we're going to give them access to a free credit report every single year at Annualcreditreportcom. And why this is important is because if there are errors, it could seriously impact your credit score. It can impact your interest rate, it can impact your monthly payment, and it can impact the cost to do the loan. We want to look out for these things. And sometimes when these errors are on the credit report, you can dispute these, and these errors will actually be removed off of your credit report. The first and most common error is error in your personal information, okay? So maybe a different name, a wrong name, like, I'm David Xie, and let's say I name my child Davida, and she's a female. A lot of times, David's information will go on to Davida's information because they're like, hey, this is a common name sometimes. So names, phone numbers, addresses are always some sort of variance on a credit report. And that leads to the second point, accounts belonging to another person. When it belongs to another person, and sometimes it could be a delinquency, you don't want that. If it's an extra account that doesn't belong to you and it's affecting your debt to income ratio, you also don't want that. Incorrect accounts resulting in identity theft. So, it's a big deal now, identity theft. There's a lot of people that have been hit by identity theft, and that's why it's really important to follow things such as the do not call registry or, non-solicit and things like that, because you don't ever want to be put in a situation where you get compromised and your identity gets stolen. The reporting of the account status, whether it's being paid on time or not, sometimes, especially if you mail a check out, the check could end up at a different location. It could say you're late when you actually made the payment on time. So checking on that. Having closed accounts, report as open. A lot of times people close accounts from a long time ago, and you're talking to call center representatives, and guess what happens? A lot of times they may hit the button, but they didn't finish it out. So it may still report as open. You may actually be reported as the actual owner of the account, and you're not. You're an authorized user. So this is a big deal, okay? If you're the owner of the account, that account cannot come off of your credit report. I recently was helping a customer, and she was an authorized user on an account. The person that she was an authorized user on had actually passed away. And the 2 months prior to them passing away, payments weren't paid because, that person was sick. Fortunately for her, she was an authorized user on the account, and we were able to take her off as an authorized user, and that actually bumped up her credit score about 50 points because those lates were so recent. Incorrect dates of last payment and activity, that's also really important. Like payments, last payment, the date it was opened, and things like that. You want to check to make sure they're accurate. A lot of times those could also affect the score. You could also have the same debt that's listed as different names. So, it could be ABC Bank acting as Walmart or whatever, right? You could have a separate account such as Walmart and then ABC Bank. And a lot of times they may be the same debts and they just may be duplicated. And that also affects your debt to income ratio. Accounts with incorrect balances and credit limits are huge, especially the credit limit, because if you know anything about credit, you'll know that the credit limit versus the current balance and the percentage of usage actually affects your credit score. You should definitely look into that, especially if it's an incorrect credit limit and your balance is over 50% utilization or 30% or 70%. Those are the bars of where the credit score starts getting lower and lower. If you do find these errors, you should reach out to the credit reporting agencies and let them know. If it is a delinquency and it's causing an error on your credit report, you should actually dispute it. So the reason I know this much about credit is when I first got into the industry, I got in at a very, very young age. And back when I got in, the average age of a loan officer was in the high 40s, low 50s. So these guys all had established business. I had to learn how to work with credit challenged customers to get them to the finish line in order to earn the trust of my referral partners. I know credit like the back of my hand. I now have a credit repair agency that I've personally vetted that I work with hand in hand, and they are able to do things and help me look for and identify things that could even provide greater value to the customer in increasing their credit score. If you have any questions, feel free to contact me. My name is David Xie, and I'm with the Xie Mortgage team. I can be reached at 757-478-8493, 757-478-8493. Bye.